Okay, 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 okay. All right, today's Monday. We've got Powell speaking at 1. So we'll see what that will do. Not sure if the AM session will give us anything of value of substance. We'll see. Um, so you see here, we ran up into this weekly, daily fair value gap, weekly high. Took that out and measuring this daily order block. Went to win 1.5, got a retracement, and we came back to optimal trade entry of this range here. And I believe we can continue to move up higher with the support of this daily order block. We are nested within a, well, not nested, but we ran into this weekly um, order block. 1, 2, 3 wicks within it. So I do believe this weekly wick here will be important, very important. That'll be the most nearest bullish or bearish um, PD array that we can reach for on a weekly. The way that translates on the daily, uh, you know, puts us right here. So let's take a look at that here as well. This is some things I was messing around with last night, yesterday evening. Um, Good stuff. Uh, where are we at? So this is weekly. I can't see it. Let me. Uh, all right, so this is it right here. That lines up nicely with 1.5. So market's about to open up. Um, just for starters, I want to do a better job at waiting for that 10 o'clock news driver to come out first, before we make any moves. But that's how we looking. New day opening gap. It's right here. Boom. I was measuring this range here. Optical, optical trade entry. Line up right here. Did it? Yeah. This is range here. Optical trade entries here. Boom. Tapped into that. Almost tapped into it. Close through it. This is a 15-minute bearish order block. 4 standard deviation that we boom came to in alignment with drawn liquidity on this 4 hour um, drawn liquidity, which called last night, and we got a nice on the 1 minute in this nice inverse fair value gap that took us higher. So I believe this will hold, and you know, could see a move all the way up here into this inverse fair value gap right there. So if we were to do something like this, given that we have a legitimate swing low here, here's optical trade entry for move back up, lining in with that fair value gap there, and versus fair value gap, balanced price range. And then we also have some daily constant encroachment, weekly constant encroachment. And this here that we're looking at is, I think it was on the 15. Yeah, 15. Um, so let's take a look here. This is the hourly constant encroachment or inverse fair value gap here, accumulation, manipulation. We got a market structure shift here. Now we're tracing back into this range here. Um, this retracement is what I measured last night. Optical trade entry was about right here. Buys are respecting on the hourly. And now we have this little move up here. If we were to put back on our new day opening gap, this is where we have a possibility of running up into. A lot of magnets over here. New week opening gap, new day opening gap. And this here, right here, we open up here, we close here, open up here. This is new week opening gap. So see what we get with that. See what we get with that. Right. And then on the 15, where it's operating off of, took this here, we projected down, boom. That's what we got there. Um, yeah, let me add a little note here on my little chart in front of me. Market maker model. That's like a big one. Yeah, so looking at this immediate range here, from here to here, drop down, like a retracement in here, then move it on up. So we'll see what we get. I haven't logged in here. Let me log in here. So it turned out that we weren't trading in that Top Step account the other day. So we made a trade last week, and we're like 50 cents away from passing it. Really silly amount. Yep. So and there we go. Lift off. Lift off. It's 9 o'clock. So we waited for that 9:30. It's on the 15. Moving nicely into that new week opening gap. We also have the here's our first percent of fair value gap right here, so we can mark this out. That's fine. Inside of the new week opening gap, customer encroachment. Yeah, this thing is just going gangbusters. See where that takes us. All the way up to this. Yeah, that's right. I gotta. So I'm not taking part of this. This would have been nice though. It's over 180 points. first 3 minutes. We do have drawn liquidity here. That's from yesterday's last trading day's high. Um, Let me get rid of this. Take out to the hourly. See what we get here. That there. So this will be the next high with strong liquidity here. And we have these new day opening gaps here. This is the previous high. Get rid of that. So unless and until we get to the new day opening gap, I'm really not interested in anything above this. I mean, we do have almost relative equal highs up here, so I guess we can mark this out. Yep. So this is the hourly. You can see this as a change of state delivery, although it's not the cleanest. 1.5 is here where we are right now, so we can see where that takes us. Um, all right. So we just need 50 cents to pass this silly thing. I'm set my profit taking to $2. If I just buy here, I'll just buy. So we got it. As soon as we got in, we got out, and we officially passed this silly combine. All right. So these are our first five. So if you were to be in this, you want to see a change to delivery right here. But look how we came right to the top of this new week opening gap, which turns out to be this is where we closed Friday. So that opening range gap, we took that out already. All right, cool. So I think we needed 60 more cents to pass, and we got it. Congratulations. I'll be back. I gotta blow my nose. How many candles is this? One, two, three, four, five. Little consolidation. Come here, here. It's a nice 50-point move. No, a little nicely there. That's nice. That's nice. Reason why I like this one is because we can optical trade entry. Usually the range that respects optical trade entry, its projections are respected. But I can't allow myself to take anything in this right now. Here's a move to a fair value gap here. Maybe we can't take this, but it's before the 10 o'clock news driver, so 20 minutes. We have a, no, it's not a volume imbalance, is it? No, it isn't. Look at that, almost 20 points. And then we also have this here. And this would, 1.5 is right here. No. Oh yeah, that's cool. Potential inverse fair value gap. Boom, right there. Still within the first 15. Boom, that's where we get in at. Boom, get in there. We did take out this drawn liquidity here, and previous ace high has been taken out here. And this is an official inverse. And we are at optical trend entry. So it's like, do we go short? Given that we took out the drawn liquidity, or do we go long? See, this as a retracement given that, we're coming out of a discount. Here's the inverse. Do we come down to this first percent of fair value gap? 60 point move. So where would we set our stop loss? Should it be above here? Had we gotten in at the confirmation of the inverse, so about 20 points. It's doable. And then we have the low here, this 5-minute. So we want to see an official change in state delivery. So we would have to allow for a close below here, you know. But this could be a bearish or bullish um, order block. Look how we come to 1.5, took that out. So just hold off there. Okay, now to the new week opening gap high. So a lot of opportunities, possibilities is in gotta rely on a higher time frame. And we gotta see PD arrays be created for them to be taken out. Then we can OTE this current range here. So inverse fair value gap at? I don't know why this isn't working. Should be working. Why aren't you working? Okay, that looks good. Run back into this inverse fair value gap. I don't know why the alert isn't working, but who we went to. Boom. We want to see is close below here to confidently stay within this. And then we also have this here. This lines up nicely to our first presented fair value gap. Just curious to see how that worked out. Perfect. Just as we suspected. And we have our projection here, 1.5, retracement of this bearish order block right here into this first presented fair value gap. That also looks good as well. So you can stay in this confidently if you were to be in this trade. You can stay this confidently knowing that we can retrace down to these levels down here, which is at least 50 points. Given that this is the inside bar of this candle here, this will be my technically my fifth five candle run. When they're nested together like that, I combine them. So at the low, some new week opening gaps. Let's see if this can inverse right here. I think we're gonna come down to this new day opening gap here since we took out previous day's high. Right, so these targets down here are all within range. Should be like, I think London's low. Is this London low? Let's see. Yes, London's low. Yeah. No, so now it wants to work. See, we get this. It's at the low here. But it's kind of respecting that. Went up to the high. This is first presented fair value gap. Now, since he says we trade through it, we shouldn't go out to constant encroachment of it. But if we trade through this, anything come back down, I'll take it. All right, so we'll give it this five. Boom. Could this be stage one, stage two? 1.5. Let us see. Is our news driver? Looks like we came to 8:30 midnight open. Smaller inverse here potential on D15. Just kind of like an inverse, but not really. If we were to enter in on this, we'd be risking about 10 points. All right, I'll take this. Nah, we got in too late. So we got our 50-point move. I moved my stop loss obviously. Bit too high. We do have this fair value gap here, which we can retrace back into and continue on moving up higher. This does look like accumulation, manipulation. We want like a market structure shift up here, or at least right here, almost inverse fair value gap, dip back into this fair value gap here and continue on moving up higher. So I don't know, man. We got 25-point move on that. And we could try this again with this close of this 5-minute bullish order block. Okay, so now we are officially out of this macro session. So a move down here would be plus 18 something points. And I believe we can continue on moving higher given that we have this 5-minute change of steady delivery right here. But let's see if we can get a retracement back down into this fair value gap here. We went right up to this new first spread and fair value gap, so see what this here. Buy there. Stop loss should be here. All right, we got stopped out there. But let's see how this closes in the next 12 seconds. So try this again. Look at that slippage. All right, so we're gonna do 15. I want this to be a swing low, and do not come to constant encroachment. I guess this would have been our silver bullet right here. I don't like that move to the first presented fair value gap and move down. I know I shouldn't be doing this, but it's tough. So if it moves up higher from here, I'll leave my stop loss where it is. Keep on moving up higher. Um, there we go. See if it wants to continue to move up higher from here. All right, so I took that out prematurely, which I'm fine with. I'm fine with that. One of the things that we're working on is patience, which we did an exceptional job over here, allowing for this to move up, and then identifying that inverse fair value gap. Look where that went to. This is one thing I did not do. We went up right into 1.5 to the T. Drawn liquidity higher time frame, inverse fair value gap, run down, violated OTE. See that we traded through it into this bullish order block that we just measured. And then we got a retracement to no optical trade entry right there. And there we go. This is what we're looking at. And that's something that we're working on improving on. So we got 25-point move. Um, was aiming for 50 points, which we would have had well more than that had we stayed within this here, this um, whatchamacallit, silver bullet. Anyways, run up, boom, optical trade entry. Looking at this bear shorter block or bullish shorter block. We didn't quite go into 1.5, but yeah. And there we go. Price is going to, we went to equilibrium of this range and optical trade entry of this range and probably going up to 1.5 up here as well. So um, my stop loss would not have had been hit had I did a market out, but hey, did well in the day. I'll take that. But we definitely know what we need to improve upon. We got some new day open gaps over here that we're running into. See that run up, boom, boom. Probably gonna go up a lot higher too. But it's all good, man. Did a good job today. Anyways, that's it for me. Came into this fair value gap here. Almost optical trade entry of this range here. So I'm about to go beam up. I'm still moving up higher. Notice I logged out. So let that be that. I'm gonna be back tomorrow. Awesome job here. We caught. Oh man, we caught this move, man. We caught this move. From here, we caught this move. This is a. I think we're coming for here. 100-point move. This is almost a 200-point move to these lows down here. We caught that. And then we caught the move right back up, which is what we're waiting for. 10 o'clock. New driver, accumulation manipulation. Boom, optical trade entry. Silver bullet. And we were in this like right here. 100 points. So technically speaking, we got half of this move here. So, not bad. Anyways, I'm gone. Good job. I love you. May come back this afternoon. May come back this afternoon. Trade the afternoon session. So maybe use some of that profit we earned from the AM session to trade the afternoon session. And just go from there. All right, good job. Peace.